So please make sure you note all your questions in the packs that we've given you, and you can always come back to us. We'll be more than happy to speak to you all on a one-to-one basis, or even answer questions openly if that's what you want. Now, the most important one, the most interesting part is a lot of people will come in and they want to know what taxes are we liable for when we pass away, what taxes we will incur during our lifetime, and so on and so forth. Now, when someone in your lifetime, the first thing that you do is you pay income tax. So whatever you earn is taxed by the state. If you have more than one asset or property and you decide to sell one or deal with it in any other way, then you have capital gains tax liability that comes into play. But that only comes into play for people who have more than one property. During one's lifetime, those will be the two taxes you will be liable to pay, and you have to then think and get advice on them. On death, there is a tax that's called inheritance tax, and that is based on what you're leaving and how you're leaving assets on your demise. Now, inheritance tax, the starting point is everybody has a tax allowance of £325,000 for each individual. So when you do pass away, the first thing that comes into play is you have this tax exemption of £325,000. Anything in excess of £325,000 will then be taxed at 40%. That's the simple basic rule. But there are other considerations that come into play. If you don't make a will, for example, then the basic rule applies. You have the tax exemption of £325,000, and the excess will then be taxed at 40%, no matter how you leave the excess. But if you do make a will, and when you come and see a solicitor or an advisor in regards to a will, the first thing they would actually try and make sure is to try and tailor your will so that we try and claim the maximum amount of exemptions that you can claim. So the starting point will be £325,000, but if you leave everything to your wife, on your demise there will be no tax when you leave everything to a spouse, because the spouse's exemption kicks in the first instance. So that the combined estate of married people will be on the first death, there will be no tax. On the second death, we'll look at the combined assets and then tax it accordingly. So that is why it is quite important to make a will. If you own agricultural assets or even business assets, then there are other considerations that you have to take into, because these assets might most likely be inheritance tax exempt if certain rules apply and you pass certain thresholds. So inheritance tax is £325,000. That's the main threshold. If you leave everything to your spouse on the second death, you will have two exemptions of £325,000. That gives you a basic tax exempt estate of £650,000. If your assets increase or above £650,000, then we look into to see if you've got a residence. If you've got a main residence and certain criteria apply, that you're leaving that residence on the second death equally between your children, you will have an additional exemption of £125,000 for each party that owns that property. So in effect, you could have it where husband and wife leave everything to each other, and then the children, for this tax year, the total exemptions are £900,000. Anything in excess of £900,000 would then be taxed at 40%. Next year is going to go up to £1 million. And then anything in excess of £1 million will be taxed at 40%. But you need to take the first step in making a will to make sure that you actually utilize the exemptions in place. Now, there are other